Picture this. It's February 2026, and the most powerful financial institution on the planet is under attack. But get this, it's not from a market crash or a foreign enemy. Nope. The attack is coming from inside the house, from its own government. Yeah, you heard that right. The head of the U.S. Central Bank, Jerome Powell, is staring down a criminal investigation. And this is way beyond just some political squabble. The President of the United States has actually publicly called him an enemy. So how on earth did a fight over building renovations spiral into an all-out war for control of the entire global economy? Well, to really get what's going on, you gotta look past the headlines and do what they always say: follow the money. And it all starts with some very specific, very official-sounding accusations. Okay, so the story officially kicks off with a bombshell. The Department of Justice launches a formal criminal investigation into the chair of the Federal Reserve, Jerome Powell. I mean, this has just never happened before. It's totally unprecedented. So what's the official charge? Perjury. Lying to Congress. On paper, this whole thing is about construction costs. Powell is accused of misleading Congress under oath about some pretty fancy alleged luxuries in the Fed's multi-billion-dollar renovation plan. And yeah, we're talking billions with a B. And this is where it gets really juicy. Look at this. On one side, you've got Powell's sworn testimony to Congress. Very specific denials. No rooftop terraces, no new marble. But on the other side, the prosecution's claims, supposedly pulled right from the Fed's own building plans, saying the exact opposite. On the surface, it kind of looks like a slam-dunk case of perjury, doesn't it? But you have to ask yourself, is this really about marble and water fountains, or is that all just a smokescreen for something way, way bigger? And Powell himself? Well, he wasn't staying quiet. He came out swinging, claiming this investigation isn't about justice at all. It's all about raw political power. In a move that just sent shockwaves through Washington, Powell went public. He's essentially saying, this whole thing is payback. They're hitting me with criminal charges because I wouldn't bend the knee and cut interest rates just to boost the administration's political chances. And this gets to the heart of it all, this idea of central bank independence. So what does that even mean? Well, think of the Fed as the umpire in a baseball game. Their job is to call balls and strikes based on the rulebook, economic data like inflation and jobs, not because the home team's owner is screaming at them from the dugout. Powell is basically accusing the president of trying to bully the ump. And this is a key point. This investigation isn't happening in a vacuum. It's just one part of a much bigger pressure campaign. You've got the president throwing out public insults, calling Powell incompetent. There are legal challenges trying to oust other Fed governors. There's even this backdoor move to lower mortgage rates without the Fed's help. And to top it all off, they've already named Powell's replacement before his term is even over. It is a full-on assault from every angle. So that leads to a huge question. When the world's most important financial institution is under siege like this, how does the money itself react? The answer isn't in Washington. It's on trading floors in New York, London, and Tokyo, where trillions of dollars are casting their votes every single second. And let me tell you, the financial markets did not wait for a verdict. They sent an immediate, loud, and clear signal of alarm. Analysts started calling it a credibility crisis almost overnight. Okay, now this is fascinating. This is the bond market sending up a huge red flag. So what happened? Investors started betting that in the short term, the president would win and force the Fed to cut rates. So short-term government bonds looked safer and their yields fell. But for long-term loans, they demanded higher interest. Why? Because they were terrified that a Fed controlled by politicians would just let inflation run wild down the road. It's like the market was saying, okay, we might get a quick sugar high now, but we're bracing for a massive crash later. And what was the result on the world stage? A 3.1% drop in the US dollar index. The dollar, the bedrock of the global financial system, took a nosedive. This is basically a global vote of no confidence in America's economic stability. Just when it looked like the administration had Powell completely cornered, Congress delivered a plot twist that nobody saw coming, and it completely changed the game. It came from a key Republican on the Senate Banking Committee, Tom Tillis. He basically stood up and built a legislative firewall. He announced he would block any and all nominees to the Fed, including Powell's proposed replacement, Kevin Warsh, as long as this cloud of a politically motivated investigation was hanging over the whole institution. This blockade creates this incredibly dangerous political stalemate, a real checkmate situation. Suddenly, you've got three possible scenarios, and frankly, none of them are good. One, Powell's term ends, but with no one to replace him, he could just stay on as a holdover. Two, Powell is forced out or resigns, leaving the most important economic job in the world empty, total chaos. Or three, it escalates into a massive constitutional battle that goes all the way to the Supreme Court. Yeah, none of those are great for your retirement account.
So after all this, the political backstabbing, the legal threats, the market panic, where does this whole mess leave us?
All right, here's what you really need to take away from all this. First, the stability of the U.S. economy, it is way more fragile than we like to think. Second, the administration's big power play totally backfired. Instead of a quick win, it created a political stalemate. Third, and this is a big one, the independence of the Federal Reserve is no longer something you can just take for granted. It's now an active risk factor. And finally, the whole world is watching this, and they're worried. They're concerned this could set a dangerous precedent for their own countries.
Which brings it all down to one final, crucial question. If politics takes over the money, who ultimately pays the price?